All right, let's dive in. We're going to look at the financial markets today, but not as just a bunch of squiggly lines on a chart. Think of it more like a huge, dynamic landscape. And like any good explorer, if you want to find your way, you absolutely need the right map.
So that brings up a really important question. If the market really is a landscape with all these different terrains, do you even have the right map? I mean, are you trying to use a compass built for the desert while you're hacking your way through a dense jungle? Because picking the right approach, well, that's everything.
So here's our game plan, our roadmap for this level expedition. First, we'll get the lay of the land with the trading map itself. Then, we're going to explore 3 totally different paths: the patient trend follower, the nimble range trader, and the decisive breakout hunter. And stick around, because at the end, we'll figure out how you can pick the strategy that's a perfect fit for you.
Now here's the thing you gotta get, and it's super important. The market isn't just one thing, ever. It's always shifting between 3 main states, or terrains, if you will. You've got these long, powerful trends. You've got quiet, sideways ranges. And then you have these explosive breakouts. The secret isn't finding one magic bullet strategy. It's about knowing what terrain you're standing in right now and using the right tools for that specific spot.
Okay, let's walk our first path. This is the home of the patient trend follower. And you should really picture this person as a kind of patient sage. You know, wise, super disciplined, someone who's playing the long game. They could not care less about all the daily noise. Nope, they're just waiting for those massive, powerful currents to form in the market. Their entire philosophy, their whole worldview, is perfectly summed up in this classic old saying. It's all about finding a strong move, up or down, and just riding that wave for as long as you possibly can. Its power is in its simplicity.
So to put it a little more formally, trend following is all about cashing in on those big, sustained shifts. What you're looking for is a clear pattern, like higher highs and higher lows in an uptrend, or the opposite for a downtrend. And you just position yourself to go with that flow, with that powerful momentum.
Okay, now this is where it gets really interesting. You have to understand the trade-off here. Trend followers, believe it or not, often lose more trades than they win. Their win rate can easily be under 50%. They take a lot of small hits. So why on earth would anyone do that? Because when they're right, they are really right. The wins are massive. We're talking 3, 4, 5 times bigger than their losses. Just one of those big winners can completely wipe out a whole string of small losses with plenty left over.
And this really highlights the kind of personality you need for this. The upsides are huge, enormous profit potential, and you don't have to be glued to your screen all day. But the downsides, man, they are psychologically brutal. You'll get chopped to bits in markets that are just going sideways. We call that getting whipsawed. You have to be okay with long stretches where it feels like you're going nowhere. This path takes some serious discipline.
All right, let's do a complete 180 now and look at a totally different mindset. Meet the nimble range trader. The archetype here is the quick fencer. Forget those long, lazy trends. This is all about precision, speed, and making quick, decisive strikes inside a very well-defined area.
This strategy, you'll also hear it called mean reversion, is built on one simple idea. Most of the time, prices just kind of bounce around an average. It's like a rubber band. When the price gets stretched too high, it's probably going to snap back down. When it gets too low, it's likely to pop back up. The range trader's entire world exists between these predictable boundaries.
And just look at this trade-off. It's the polar opposite of the trend follower. The win rate is high, often 60% or even better, which feels fantastic, right? But the reward you get for your risk is much smaller, usually about 1-to-1. You're not looking for home runs, you're just trying to hit a whole bunch of singles, building a steady stream of small, consistent wins.
So the pros are pretty obvious. You get a lot of action and that psychological high of winning often. But that one big disadvantage? It is an absolute killer. When that cozy range finally shatters and a powerful new trend takes off, a range trader can get wiped out with one catastrophic loss if they don't get out of the way fast. This is not a set-it-and-forget-it strategy. It needs your constant attention.
So, to map out their battlefield, these traders use a very specific set of tools. Things like oscillators, you've probably heard of the RSI, help them spot when things are overbought or oversold. Bollinger Bands act like a moving channel around the price. And of course, you've got your classic support and resistance levels that act like the hard floor and ceiling for their trades.
And that leads us right into our third and final path, the decisive breakout hunter. See, if the range trader loves living inside the box, the breakout hunter is the person waiting for the exact moment that box shatters into a million pieces. The archetype here is the bold pioneer, the person who's ready to charge headfirst into brand new unexplored territory.
The whole goal here is to catch the very first spark of a new trend. You know, after a market has been quiet and coiling up for a while, all this energy gets stored. A breakout is what happens when the price finally smashes through a key barrier, releasing all that pent-up energy like a dam breaking, and hopefully kicking off a huge, powerful move.
The breakout hunter's profile, interestingly, lands right smack in the middle of the other two. You're looking at a pretty respectable win rate, right around 50-50, with a solid 2-to-1 reward for your risk. It's kind of a balanced approach, really, trying to get the best of both worlds. You want to catch the start of a big move, but with a decent chance of being right. The best part, you're getting in right at the beginning of what could be a massive move. The profits can come incredibly fast. But, and this is a huge but, the number one enemy of the breakout trader is the false breakout. This is that gut-wrenching moment when the price pokes through a key level, sucks you in, and then snaps right back like a rubber band, trapping you. It makes for a super high-stress, fast reaction kind of day.
So how in the world do you avoid those traps? Well, smart breakout hunters always look for confirmation. They look for classic chart patterns, like triangles or rectangles, that show pressure is building up. Then, they need to see a massive spike in volume. Volume is the fuel. It confirms that big players are behind the move. And finally, they want to see a strong candle close decisively outside the old range, not just weakly poke its head out before running back inside.
Okay, we've explored the 3 main paths on our map. Now we get to the most important part of the whole journey, figuring out which one of these paths is for you. This has nothing to do with which strategy is the best. It's all about which one best fits you, the explorer.
This table right here pretty much sums it all up. Look, if you're a patient, disciplined person and you don't have a ton of time to stare at screens, trend following in a trending market could be a perfect fit. If you're active, you need that constant action, and you can be at your desk, well, range trading in a quiet market might be your thing. And if you're decisive, you can handle stress, and you have a tolerance for risk, then maybe waiting for those volatile breakouts is your true calling.
So let's get personal for a minute. You have to ask yourself, do you truly have the patience to hold a winning trade for days or even weeks without messing with it? Or does the very idea of holding a trade overnight give you a panic attack? Your gut answer to that question points you directly down one of these paths.
Next up, you've got to be brutally honest with yourself about your life. A range trading strategy that demands you watch the market every second just isn't going to work if you have a demanding 9-to-5 job and a family. So, how much time can you realistically dedicate to this each day?
And finally, this is all about your psychology. How are you wired? What feels better deep down? Is it the steady, satisfying feeling of banking lots of small wins? Or do you have the mental fortitude to take 10 small paper cuts in a row because you know that a massive, game-changing win could be right around the corner? Because here's the final takeaway, the most important lesson of all. In the end, the market doesn't reward a specific strategy. It really doesn't care if you're a trend follower or a range trader. The market rewards one thing and one thing only: your discipline, your consistency, your complete and total mastery of the path you have chosen. So the real question isn't which path is best. The real question is, which path will you master?